Let's talk about Lyft and Uber, both in the ride hailing service industry and both reported quarterly earnings recently. Uber reported fourth quarter earnings that beat estimates, with the CEO stating that their fourth quarter was the strongest quarter ever and how it capped off its strongest year ever in 2022. Meanwhile, Lyft also reported their fourth quarter earnings, which was below estimates, and their forward guidance was also below estimates. And as a result, the stock crashed more than 30%, which was equivalent to roughly 2 billion in valuation. So we have the, I guess, fundamentals. Let's look at the charts. So this is Uber first. We're going to go to the monthly chart. And what stands out to me is that on the monthly chart, Uber is trying to, well, it did, right? It did breach the monthly downtrend line back in January. And I'm just trying to see if there was a gap. Okay, let's go to the weekly chart. So what we can see is lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, higher high, higher low. It appears that price wants to make a higher high. Let's go down to the daily chart. So as you can see on Tuesday and then on Wednesday, after announcing earnings, price gapped up only to close the gap. And then today we see a gap down from Thursday to Friday as a result of the Lyft news. So usually when you trade, you buy low, sell high. So anybody that bought a pair is in the red. Typically what you want to do is you want to wait for a retracement. And what I see is buyers at this 33 level. So we're going to mark that off as daily buyers at 33. And what I like about this is that we had this strong move up, which took out this pivot high. Let's go across. I like this level here. which makes sense. So price gapped on earnings into a level where there were daily sellers at the 38 level. So one could have bought puts and would be in profits right now. Just trying to see if there's any other levels of interest. So right now Uber is stuck between buyers at 33 and sellers at 38. So potentially you might get a bounce to take it back up to 38, which is a $5 range. And if you were to place a reward to risk ratio, potentially you're looking at a reward to risk ratio of 5 to 1. Let me just go down to the 4-hour chart to see. So I'm just going to mark this off. So this was the origin of the strong move up. But I like the 33 level as that's a whole round number. Okay, let's go to Lyft. Now comparing the two charts on the monthly, we had Uber breaching the monthly downtrend line. And when I look at the Lyft on the monthly chart, the chart is broken, very broken. It's not worth really marking, but I will. We'll say at the 65 level, there are monthly sellers. And on the downside, Lyft is in jeopardy of making new all-time lows. Let's go to the weekly chart. So in the weekly chart, we do have bullish divergence. Right, we have low, 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 but on the RSI we have a high low, equal low. So we're seeing bullish divergence. However, on the news, price broke this short-term uptrend line. Now the rise in the stock price from December to early February was a result of the broader stock market rallying in January. However, you see this extended range red candle. Well, that was the sell-off on the news. Let's just go to the daily chart. And that long range extended candle that's red is a result of the gap down. And when the market opened on Friday, price continued to sell off, which meant that although we had a 30% drop in price, Wall Street did not see that as a buying opportunity. They did not see that at $10 even, it's selling at a discount. So what do you do with Lyft? It's a no touch. What do you do with Uber? Well, if you want to invest in the ride-hailing service industry, your best bet is to go long Uber for the longer term.